Hi guys, welcome back to the channel. If you're new, please consider subscribing. Trust me, that's the only way that you're going to know when we post fresh content. We've got many videos lined up, and this year I'm going to just be focusing on sharing value. I just want to focus on sharing value, so subscribe. We're trying to reach 50,000 subscribers, so you can help to get us there. And like this video, that's the only way that you can motivate me to make more videos for you. And leave a comment in the comment section below if you've got suggestions for videos that you want to see on this channel. If you've got suggestions, ideas, questions that you want me to answer through the videos on this channel, leave them in the comment section below. If you're looking for things like Forex robots, systems, indicators, and stuff like that, there are links in the description section below. Go through those blogs and see if you cannot find what you're looking for. Don't be like some people who just come and leave a request when the things are already there on the blogs. There are pages and pages of stuff on those blogs, so go through them and see if you cannot find what you're looking for. Then you can always come back and leave a request, and when you leave a request, also you allow us time to look for the stuff. Some of the stuff we have to buy, some of the stuff we also have to rely on our networks of people who are in groups or in Telegram groups, Facebook groups, VIP forums and stuff like that. So yeah, let's get into today's video. So there is this one trick that some of you often neglect when it comes to making money, really making money in forex trading. It's correlations. Some of you, especially the beginning traders, you do not realize the value in understanding the correlations between forex pairs. What do we mean by correlation? We mean that you find that when you are trading in the market, there are certain pairs that have relationships. They are like uncles and nephews and nieces and aunts, stuff like that. So you find that when this uncle is buying, the aunt is also buying, or when this uncle is selling, the nephew is buying. Those correlations. So basically it's pairs that have identical characteristics. Sorry about that. So the pairs have got identical characteristics, and you can Google this. It's not like a new concept that I am talking about, that I have to charge you money and stuff like that. But with this knowledge, you are able to take your trading to the next level. You are able to build on your trades. For example, you notice that gold is buying. Then if you understand correlations, you will also know which pairs that you need to be buying, and you understand which pairs you need to be selling. So let's talk about correlations, some correlations that you can actually take advantage of. The first one, let's talk about the US dollar index. Most people ignore this. But it's one of the simplest ways of trading gold. It's how I first became profitable trading gold. You just need to wake up every day, understand where the US dollar index is going. The US dollar index measures the value or the strength of the US dollar. And if you understand the correlations that we've been talking about, the US dollar and gold has what is known as a negative correlation. It means when the US dollar is going up, gold prices will be falling. And when gold prices are going up, certainly the US dollar will be falling. So one of the things that you can actually do if you are trading gold is you wake up in the morning, you go to your charts, and first of all you go to your US dollar index pair. On some brokers it's USD XY, on some brokers I don't know what they call it, but you go through there, you do your analysis, and you look at, is it going to go up for the day or is it going to go down? If it's going to go down according to your analysis, then it means you have to be buying gold. But if your analysis says the US dollar index is going to go up, it means you certainly have to be selling gold. So that's another tip. Now we come to the headline that made you to open the video. Basically, when you are selling gold, you also need to be buying USD Swiss franc. According to some journals, according to some experts, the Swiss franc, about 25% of it is actually backed by gold. So the Swiss franc is among the currencies that has a portion of it backed by gold. So what it means, if gold prices are going down, then the Swiss franc is losing value, which means the US dollar is gaining on the Swiss franc. So when you notice that gold prices are falling, quickly sell your gold, but also don't just sit on your hands. Also go and buy on USD Swiss franc. Second pair, USD JPY. The yen has what is called a positive correlation with gold. It means when gold prices are going up, the yen is also strong. If gold prices are falling, then the yen is also weak. So the moment you see that gold is falling down, it means buy USD JPY, because it means the yen will be weak and certainly the US dollar will be strong. Another pair that will be of interest is AUD/USD, because the Australian dollar also enjoys a positive correlation with gold, because Australia is one of the biggest producers of gold. So their currency is also tied to the gold prices. So the moment you see that the gold is falling, you also need to sell AUD/USD, because the Australian dollar will also be weak. If you see gold is buying, then you also need to buy Australian dollar versus USD. So this should make sense to you. These are some of the pairs that you can actually trade based on whatever gold is doing. So just to recap, the first thing that you probably do is you wake up in the morning, you go to your US dollar index and see if the index is going up or if it's going down. If it's going up, then it means you are going to be selling gold that day or that week or that month. I don't know the time frames that you use for your analysis. Now if you are going to be selling gold, it means you need to buy USD Swiss franc, because the Swiss franc has a portion of it backed by gold, so it's going to be weak because the gold is falling. Then you also need to be buying the USD JPY, because the yen is also positively correlated with the prices of gold. If gold is going down, then the yen is weak. So you need to be buying USD JPY. If gold is falling, you also need to be selling AUD USD, because the Australian dollar is basically also tied to the fortunes of gold. So I'm hoping that some of these tips help you. You don't necessarily need to just place a single trade on gold and then you get confused about what else to do. Do you just sit, or what do you do? And sometimes you notice that a person is selling gold but they are buying AUD USD, which does not make sense. Maybe a person is selling gold but they are selling also USD Swiss franc, which certainly makes no sense. How can a person sell gold and a person again sell USD JPY? It doesn't make sense. It means the person does not understand the correlations of those pairs, and certainly they are either going to lose money on the USD pair that they've sold, or they are going to lose money on gold. So be careful with correlations, and when you understand some of these correlations, they make your trading so easy. So you can Google some of these things. I'm not talking things that are out of this world or things that are highly hidden secrets. These things are known in trading world. That's how people are making more money than you. So correlations. Like the video, leave a comment in the comment section below. Until next time, bye.